good afternoon and welcome to everybody on the market closing business today show. This is 25 minutes to go as the markets are going to be shutting shop, but let's quickly look at what the action is currently hovering at. Remember, we were lying low for the first half of the trading session. We bounced back pretty smart, went on to the day's high point, even beyond 25,300 on the Nifty, and now we've again slipped into the red, and you're hovering around 25,163 on the Nifty. That's about about half a percent lower in trade. The Nifty Bank, however, is still about almost a percent lower. Let's also look at some of the other key sectors at this point in time. Mid and small caps are in fact taking a major part of the brunt today, over a percent cut for both these sectors. When we look at even the other sectoral indices, barring metals, oil and gas and infra, rest all of the sectors are deep into the red. Look at PSU banks, that's lower in trade. Banks overall have actually declined. Real estate, pharma, FMCG, and even the auto sectors and even the IT sector is trading lower in trade. Let's look at the winners in trade. Nevertheless, despite all this volatility that we've been seeing since morning today, on the Nifty, you have names like Eternal, that's up by 5.5%. Remember, awaiting earnings, and therefore the stock is up at about at 283 levels. Ultratech Cement follows, Indigo. You also have JSW Steel, ONGC, and Adani Ports as among those stocks that are still hovering higher in trade. Max Health from the pharma pack is also doing well, but more than half the stocks are still into the red as far as the Nifty is concerned. Look at what's happening with the large private sector banks like ICICI Bank, down by nearly 2%. Trent, TCS, BEL, Apollo Hospitals, up HDFC Bank. These are all the stocks that are down by over a percent in trade today, and therefore some drags are being seen. On the Nifty 500, there are still stock-specific reactions to the earnings and news flows that are still taking the stocks higher in high single digits or in double digits as well. Look at what's happening with KPR Mill, that's up by 5%. Alpros Auto is higher. Thangamile Jewelry is up in trade. Ixico, that's Lee Travenues, that's also up by 5%. You have Nosil, that's higher. Credit Axis Grameen has been hovering about 12% now. You have several other names that are still holding up in an otherwise weak setup, but many names like Tourism Finance Corporation, One MobiKwik Systems, you have a lot of these names, Aarti Surfactants, they are all dragging in the broader markets as well. But let's shift focus to Davos 2026. First up, mega exclusive from Davos, Group Editor, Business Today, Siddharth Zarabi has spoken exclusively to Union Minister for Railways, Electronics and Information Technology, Mr. Ashwini Vaishnaw, on India's growth roadmap. He's also spoken about the possibility of India hosting an autumn Davos, detailed massive investments in railways and manufacturing, and he's shared his vision for India's semiconductor ambitions, electric mobility push, and climate action agenda. Let's listen into an excerpt from that conversation.
You are here, there are other union ministers, there are 10 states, notable chief ministers who are here, and the sense that we have been picking up, talking to others from overseas about India's economic story, and people are looking at India as a strong spot for growth. Multiple investments, including FDI in the digital and technology space, have come into India, whether it's Google, it's Amazon, so many other companies. What is the sense you are picking up about the India story and the likelihood of even further investments on the back of reforms that Prime Minister Modi's government, 2025, frankly, should be called the year of reforms in India?
Absolutely. People understand the reforms express which our Prime Minister Modi ji has flagged off. People really appreciate the reforms in GST, the opening up of nuclear sector, the reforms in labor. So many reforms which are happening practically every sector. People recognize that. The investment momentum is very strong. There is a suggestion that now time has come when we should be having a World Economic Forum in India. So that idea has also come, kind of autumn Davos in India. So that idea is also
Has
being...
the city been decided, sir?
So this is a new idea which has come, which basically shows the recognition of our country, of our economy. People see India as the fastest growing major economy with inflation under control and very healthy balance sheet of the central government, very low debt in the economy. So all these things are noticed by the people.
Ashwini, I also want you to talk about another area which is a massive area, because sometimes all the attention goes to digital infrastructure development, but the physical infrastructure, including the railways that you are championing, plus the highway program. In terms of the railways discourse, I don't see any other comparable economy in the world which is investing the kind of money in a railway network build out. Someone here yesterday said that in India over the next 5 years, 10 years, everything has to grow 4 to 5 times to even meet today's demands. About the railways, what will you share with us?
Exactly, and our Prime Minister has given so much focus on railways right from 2014 onwards. The investment which is now coming in railways is immense. The execution pace is very high. We have added 35,000 kilometers in the last 11 years. We have electrified practically 99.8%, 99.6% of our network, 47,000 kilometers electrification we have done in the last 11 years. We are totally transforming the way our trains are manufactured, new generation Vande Bharat trains, Vande Sleeper has been recently launched, Amrit Bharat, Namo Bharat trains. So people are so excited about this entire journey of railways, and it's highly environment friendly mode of transportation, because compared to highway, it has 98% less carbon dioxide load. So it's very important that for a sustainable growth, for a clean growth, we keep on our focus on railways.
Sir, in terms of electrification, I am talking about railways electrification and tying it with the broader climate goals that India has adopted, including the EV push for road transport. If you could talk a bit more about the railways electrification program, and in 3 to 5 years, what kind of achievements are we likely to see?
Our railway electrification program is now completing another few months, and it will be completed. So this will be now over. We are actually closing down the organization which was established for doing the railway electrification. So it's a very satisfying journey. Our Prime Minister's focus was very important, and that has really helped us reduce the carbon footprint in our country. I really appreciate the focus on renewable energy. We have today 50% of our power generation capacity is from renewable energy. Out of the 500 gigawatt, 250 gigawatt is from renewable energy sources. So that's a very important, significant point. In case of nuclear, which is going to provide us the base load, the new Shanti Act, that's going to give a major boost to our nuclear efforts.
If we were to talk about India's chip ecosystem, Ashwini, a lot of effort has gone in, and again the parallel that I have to say is that it will be difficult to find any large size and comparable economy, frankly, which is doing so much on this. There are some traditional hotspots which have happened over decades. But on the chip ecosystem, in terms of the sequencing and the effort that you have been personally leading, where do we stand today?
So yesterday in a roundtable, the industry leaders from semiconductor industry, they said that India is probably the only country which will be having the end-to-end spectrum of entire chip ecosystem, entire chip value chain. Today we are designing 2 nanometer chips in our country. There are 24 startups which have started designing their own. There are thousands of students, more than 65,000 students who are designing chips, manufacturing them. So the design part of it. The fabrication, our fab is coming up very well in Dholera. The ATMP units, 9 of them, they are coming up very well. They are starting their commercial production in 2026. The downstream electronics manufacturing industry. So this entire chain is now coming up, taking shape in our country. And good thing is electronics manufacturing and IT services combined are very large export economy. Today electronics manufacturing has become, electronics exports has become the 3rd largest exported item after petroleum and engineering goods. Very soon it will become the 2nd largest export item. So the growth in the last 11 years in electronics manufacturing is 6 times. Electronics exports is 8 times. Semiconductor is a new industry which has set up. The design ecosystem is developing very fast. The talent pipeline is growing very rapidly. So it's a factor which the entire world has taken note of, and our path is very well calibrated and very well thought through. By 2030 we should be doing 7 nanometer chips. By 2032 we should be doing 3 nanometer chips.
So clearly, as you see, India is truly emerging as the investment destination of the world at this point in time. Remember, while global CEOs continue to remain anxious right now over geopolitics, tariffs, and policy uncertainty, it is India Inc. which is telling a very different story. India's banking system, retail demand, and balance sheets are showing resilience, even as export sectors grapple with global headwinds. At the World Economic Forum in Davos, Business Today's group editor Siddharth Zarabi also spoke to Amitabh Chaudhry, Managing Director and CEO of Axis Bank, on the health of India's banking system, interest rates, retail lending, private capex, and the road ahead. Here's an excerpt from that conversation.
You've been here, and before we get into some specific questions that are relating to the overall health of the banking industry in India, I want to begin by a comparison between the mood of the Indian CEO and the global CEOs. Indian CEOs dealing with their own challenges, but the global CEOs far more pessimistic perhaps than they were in the past.
You captured it quite well. I think Indian CEOs generally are optimistic about the Indian economy. The growth forecasts have come in from IMF. The local economists have also been talking about 7.5% kind of growth this year and next year. So in that sense, the domestic demand is there. Opportunities are there. Obviously, the private capex is not picked up, but the larger groups are obviously finding their spots where they are investing money, and they do believe that the Indian economy will continue to do well. Global CEOs have a different problem. They don't know what is going to happen tomorrow, how the pack of cards will change, how the supply chains need to change, how tariffs could change, how, some countries who are friends suddenly are, kind of battling with each other in terms of some cyber rattling going on. So in that sense, I think there are many more variables to deal with. But the overall world economy forecast still remains pretty decent. So in spite of all that is going on, it appears that they are managing these challenges well. But yes, there does come a point where you feel not only frustrated, but you feel, what are we kind of really doing on a day-to-day basis, given so many variables that seem to be at play all the time.
Absolutely, and policy certainty is something that most CEOs would appreciate, but in the American context and its impact, that is a clear tough one. Let's talk about our domestic story, and this is to do with the health of the banking system. I always ask you this whenever I talk, because over the last 4-5 years in conversations with you, we've tried to capture the health of the banking system. That question to you today, what would be the response?
No, the health of the banking system remains extremely strong. We did, over the last 18 to 24 months, saw a bit of a retail cycle developing. The retail credit cost did shoot up. Gradually, slowly, it has stabilized. It is coming down for sure. The retail costs are not only stabilizing, in some cases they started going down. The bank, results which have just been coming out over the last 2 weeks are a clear indication of that. So in that sense, wholesale side is benign. SME, everyone seems to be watchful while it is growing at a rapid pace. No real signs of any problem as yet, and retail cycle is turned. So the profits are at record high. Capital ratios are pretty solid. On the credit side, things seem to be moving in the right direction. So I would say banks' balance sheets are relatively quite strong, as they were last year and a couple of years back also.
Amitabh, one of the points that, and you mentioned, and it's basically coming from there, are there any growth worries that you are seeing, particularly from export-intensive sectors?
Well, the export-intensive sector has suffered, especially when they're supplying to US because of specific tariffs which have been put in place. But Indians are resilient. I think they've found ways to continue to either supply to the US, or they have brought down the prices and they're cutting costs. They're also getting the support from the government in some form of some incentives, some schemes whereby they can get some respite. But I think long term, if this tariff situation and this uncertainty is going to remain, and it's not going to get solved easily, and even if we sign an agreement, this tit for tat which keeps happening all the time, I think we need more permanent solution to this problem, that especially the smaller exporters do need to be supported. So my view is, I'm sure the government is looking at it quite closely, and hopefully in the budget or something beyond that, we will see some support being provided to the exporters.
Let's talk about the overall interest rate scenario. What's your own sense? We've seen what the RBI has done over the past several quarters. What do you feel is likely, given the way inflation is behaving, the growth prints that the RBI will read? Incidentally, a new GDP data series will also come out. So what's your sense about interest rates?
My view is that I think we are pretty much done on the interest rate side. I think the interest rates have been brought down to a level where They are quite supportive of growth in the economy. Further cut interest rates is not really going to lead to a situation where further growth will be spurred on. I don't think interest rates is the issue or isn't coming the way of entrepreneurs investing, in terms of capex or investing in growth. So my view is, and if you look at the inflation also, it's slowly, gradually, while there is a base impact, it will creep up. Currency is depreciated. We do import a lot of our stuff. End of the day, keeping inflation at 4 to 5% is not a bad thing for a developing and a growing economy like India.
You spoke about retail, so let's come back to that. The consumption story and the revival, especially on account of GST cuts. Which sectors do you see performing for retail lending going forward?
So when the retail crisis hit, obviously there was a lot of cuts which were done on the personal and the kind of the unsecured side, which is on the credit cards and personal loans. And obviously there were a lot of changes which were brought about in the MFI scenario also. So you saw MFI lending also going down dramatically. And now slowly, gradually, as the borrowers have worked their way through the system, they have, GST cut has helped them, the tax cuts have helped them. So either they're coming out of the crisis, or people who had to kind of go over the cliff have gone over the cliff, and well, that is past. Yes. The new set of borrowers, underwriting standards have been changed, they have been improved, the risk models have been further tightened. So in that sense, there is more confidence about lending to the borrowers, either who are borrowing in the past and want to borrow more, or about the new borrowers. So my view is that India obviously is seeing consumption growing, especially you're seeing on the metro markets, and slowly even in the urban market, in the rural markets, the consumption is growing. You saw the auto sales, they have broadly picked up. You are also seeing revival on the real estate side. You see on the, especially the retail market, and not necessarily the commercial, you are seeing a little bit of revival happening on the real estate sector. And obviously the investments in the infrastructure side continues apace. So it's a good story broadly all around.
Okay. One final point, and this is also to do with a topic that you have dealt with in the past, and this is private sector capex revival. In answer to those questions over the recent past, a lot of captains of industry point out that, listen, it may not be happening in previous sectors, but there is new money going into newer sectors. Is that how you would also describe it?
Yes, I think you are seeing new money going into some of the infrastructure sectors, and obviously the new stuff like data centers and renewables and some of those areas. Some of the areas like telecom have had a high base rate, so you can't continue to expect investments to continue at the same rate as in the past. So my view is that yes, the new sectors are attracting a lot of money, attracting a lot of investment. A lot of business houses are looking at putting more and more money in that area. But the revival of private capex still remains, I would say, on the lower side. It is at similar rates as last year, but has it really picked up? Are we seeing some new spur in demand? No, not as yet.
Okay, one very final point, and this is with raising deposits. The challenges that at the macro level that the banking system has seen, are they likely to continue, or you see some changes?
Well, if credit growth is coming back, RBI has confirmed that they will provide durable liquidity. I think it's a matter of time, 12 to 18 months hopefully, where the deposit growth rate should also pick up. If it does not pick up, then credit growth will come down again. I mean, so at the end of the day, you want to keep the economy engine revving and, moving at a certain pace. The deposits have to be supportive of that growth. And at a single digit or a very small double digit growth rate, it's not going to work. So I think everyone is seized and cognizant of this issue. So I'm quite hopeful in the next 12 to 18 months, some of these numbers should start picking up.
All right, let's focus to the markets yet again. 25,154 on the Nifty. There's an 80 point of a downtick as you see. There's continued weakness across various sectors, including the broader markets and the banking and the financial services space as well. There's also drag across FMCG, auto spaces, pharma index as well. A lot of those defensives are also falling under pressure. Even IT sector is lower in trade. Breaking news coming in on your screens, viewers, as far as the rupee hitting an all-time low is concerned. Viewers, this is the all-time low level for the rupee right now, 91.67 against the dollar. In fact, now it's slipped to 91.74 against the dollar, nearing that 92 mark against the dollar as well. This is the lowest that you have ever seen for the Indian rupee as well. In fact, this would also mark the single biggest fall in an intraday session in the last 3 months for the rupee, as we have been seeing, and there is continued weakness as we are seeing against the dollar as far as the Indian rupee is concerned. Let's pull up all the export-oriented sectors for you. Let's look at the Nifty IT index. Let's look at Pharma index. Usually, it's the export-oriented sectors that tend to slightly benefit from the weaker rupee. So you do see the IT index, even though it's down by 0.3%, it's climbed to the day's high point, and that's the reason the rupee really supporting that. Pharma index still lying low about 0.5%, not really looking at the impact there, but it's the IT index that's now 0.4% down, but it's definitely recovered sharply from the day's lowest point on the back of the falling rupee there. We will also be looking at the oil and gas names. Remember, that's where some pressure must be emerging as far as the OMCs are concerned. HPCL, IOC, even though the index is up by about 0.28%. Remember, there's a lot of importing of oil that we do from abroad, and that's a space, especially the OMCs are going to be finding it difficult to be buying the same amount of fuel for the same level because of the falling rupee. There could be some further pressure onto this one as well. Geopolitical tensions that have triggered the stop losses for dollar purchases, definitely leading to this sharp fall in the rupee right now. Shifting back focus to Davos now, viewers. Speaking at the World Economic Forum in Davos, Deloitte South Asia CEO Romuald Shetty has said foreign investments into India are largely sector-driven, focused on scale, technology, and unmet demand. He also has added that India should position itself as a global AI hub while building sovereign AI infrastructure and accelerating AI adoption beyond the pilot stages. Let's listen into what he had to say.
Recent global investments that have come into India, let's say American investments in the data center space, for example, and Japanese investments in our banking space. What do they tell you? Is this like sectoral picking by foreign investors, or do you see other sectors where foreign capital, FDI, can come in the near future?
So I think where there is scale, where there is technology, and where there is unmet demand, I think the global players will come for those kind of sectors only, right? So they may not necessarily come for everything. So that means, obviously, if you look at data centers and others, that is a unmet demand because we will need a lot of data center in India, but not only for India. It may be actually for outside countries. So we don't think necessarily that data centers are for India. If you take financial services, access to credit still can be dramatically improved 3 times. We were talking to Amitabh just now. So, 3 or 4 times more as well, right? From considering. So it's got to be, it is sectoral. It will not be all sectors. Healthcare. I do think healthcare is tremendous because 1.4 billion people, the data sets that we have, Siddharth, we maybe be able to identify a lot more issues well in advance compared to others because nobody has this kind of data sets, variety of data sets as well. So I would say it is going to be sectoral. It's not going to be every sector, but yeah, we've got some good potential.
In an earlier conversation, one of my guests said that India, forget the talk between being a AI superpower, US, China, forget that. Just position yourself as a global hub for AI and its development, and in some ways enabling AI through all of this and skilled manpower. Is that a proposition that you agree with?
I would agree, but somewhere we need to have our own sovereign infrastructure as well because it can get cut off anytime. And so therefore we need to build. I mean, it's not that we have to do everything, but we have to build some bit of our own sovereign infrastructure. So therefore I do think that is essential as well.
And do you think the efforts that are being made through the AI mission at the central government level or certain companies, how would you assess the overall private and public sector initiatives in this regard?
So if I did a broad brush, less than 25% of pilots are getting converted into enterprise-wise programs. Unless you get into 65-70% of pilots that move into enterprise-wise AI programs, you're not going to be successful. I think so. That's what we need to move towards. We also need to reskill our people because AI as a strategy, everybody has in India. Everybody has. Everybody's thinking. Somebody may not be doing too much about it, but somebody may be doing a lot. But the infra and the people skilling has to be completely different from today's what people are skilled. So I think that is something that we need to work on.
All right, viewers, keeping an eye out on the rupee again, 91.74 against the dollar, the biggest fall for the Indian rupee in an intraday session in the last 3 months, as we have seen. It has fallen to an all-time low level against the dollar. Continued geopolitical tensions and uncertainties over trade deals is leading to this sharp fall into the rupee. That's also hitting a lot of import-oriented sectors, however, providing some support to the export-oriented sectors at this point in time. And we are seeing an impact also on the markets. The markets have shut shop weak, 65 points lower, 25,167, albeit we did see a bounce back from the day's lowest point. There was some buying, but the Nifty has yet again ended in the red. The Nifty Bank now down by over 1% in the trade. Across the board, private sector banks, PSU banks, financial services, all the sectors within the banking story have slipped. IT sector managed to pull back from the day's low point, but still ended 0.3% lower in trade today. Let's also look at the pharma index that was down by 0.6%. Barring metals, oil and gas and infrastructure sector, all of the sectors in fact slipped into the red. Top winners despite all this volatility in trade today: Eternal 5% higher, Indigo 1.5% up, Max Healthcare, Ultratech Cement and JSW Steel among those top movers on the Nifty. On the declining side today, we have seen sharp fall on ICICI Bank, in HDFC Life, HDFC Bank, Axis Bank, BEL, Trent, Tata Consumer Products. These were all the stocks that in fact declined in trade. Continuing with getting you all the top conversations from the World Economic Forum at Davos 2026. Business Today's Siddharth Zarabi and India Today's Rajdeep Sardesai also spoke to Rajan Mittal, the Vice Chairman of Bharti Enterprises, and Anant Goenka, the Vice Chairman of RPG Group and President FICCI. Mittal, whereas he warned about the global trust between nations being at an all-time low and saying trade deals must be fair and balanced, he also added by saying businesses are diversifying now into new countries through FTAs to combat the impact of tariffs and uncertainties from the US, while India, they believe, continues to remain well-positioned despite volatility.
I think for the last few quarters, we've been believing that the trade deal is around the corner, but it has been evading us. Clearly, the government is on overdrive on FTAs with many other countries, and we are looking at diversifying trade across these new countries, whether it is New Zealand, Oman, Jordan. Recently there was a visit. EU will be a big one that comes in. There's also been a change in Indian FTAs from the developing world now to the developed world, where there is far more complementarity that is there. So even as business, we are looking at diversifying to new countries where FTAs are getting signed, and that presents a great opportunity.
In a sense, though, Mr. Mittal, is there a shadow of Donald Trump that looms over not just Davos, in a way perhaps that you've been coming here for years, that an individual sort of looms large over this World Economic Forum and looms over Indian industry as well? We've just seen a major market crash today. The markets have tumbled and there's a sense of uncertainty. Does that concern you as we start 2026, that we are in very uncertain times and business leaders have to adjust to these uncertain times?
Rajdeep, the geopolitics is very different. The world is in influx, that's a given. The trust factors between nations, the trust factors between bilateral organizations is probably the lowest that we have seen. Having said that, I go around Europe, US, and I see the economies around. India is in a good shape. Trade deal is only one factor. We have a large domestic consumption markets. We have a government which is working very closely with the industry to ensure that the industry, grows. India is growing to 6 to 7%. Sure, now we need to grow maybe double digit, but there are issues which are not in our control. Having said that, my belief remains Indian entrepreneur is also, in that sense, very active, very agile. There has been a hit in certain sectors of the industry. US will find its own space and place, and I'm certain as an entrepreneur and as an Indian I speak, we can't compromise our nation's sovereignty in that sense, or I would say the economic sense, where there are entrepreneurs, SME, MSMEs involved, farmers involved. We have to keep that in mind, that any trade deal that happens must be that way equitable.
It's not affecting business confidence, this constant uncertainty. Now it's Europe versus the US. We don't know what Donald Trump will do next. Is it affecting business confidence in India? Or do you believe India's fundamentals are so strong in your view that we shouldn't be worried about the world around us?
No, I wouldn't say that. As I said, the influx is there. So there is always an uncertainty. And we cannot be bereft of that uncertainty. So yes, it does impact the growth, the capex spending, all that impacts. But also we have to, life has to go on. We have to ensure that whatever the issues which are with a particular country, they're being managed. Will it happen tomorrow? Will it happen in 3 months? I think Indian industry is taken into this stride. It will happen, but probably timing nobody knows. Sure enough, the Europe-US challenges as we are seeing, we hope that they do not, go through a much larger situation. So the world must remain calm. Otherwise, there will be an uncertainty. That is a given, and that does impact industry in India and across the globe.
All right, viewers, it's a wrap then on the Business Today show. Don't forget to tune in tomorrow morning at 9 a.m. for all the market opening action. I'll be back for that as well.